There you have it, hearing our Rajneesh Kumar speaking on a bout of topics. But let's move right back then to market Fatafat, and just a quick status check on the index, 10,589. We've tempered off quite significantly and are on the brink of breaking into the red. But nonetheless, a whole host of stocks coming your way. We have our team of research analysts as well as Kunal Bothra and Ashish Kayal on technicals. Well, Mubina, I'm going to start off with you. Infi, that was the buzzword yesterday. Not a bad set of numbers. What exactly is the brokerage verdict? How's the stock faring?
Well, the stock's faring pretty okay, especially given the fact that I think one of the key positives for Infosys was the deal wins for the second quarter, which came in at a whopping $2 billion. That's a really good number for the second quarter. Revenues have managed to top estimates. Dollar revenue has done particularly well. Profits, wouldn't say so much so for that. It's come more or less in line with what the ET Now poll was suggesting. But brokerages seem to be quite okay with the numbers. Most of them have either an outperform or a buy stance. 1.81% higher for Infosys.
Okay, that's how the stock is after the quarterly earnings and management commentary that has been fairly optimistic. Moving on, ACC is all set to deliver their numbers, but what are the technicals suggesting in trade today? Kunal, give us a brief.
So I think after yesterday's price up move, it was almost 3 or 4 days of consecutive price up move for the stock price. Yesterday when the stock crossed that 200 moving average on the back of some slightly higher volumes, it indicated that maybe the stock is now trying to find a decent uptrend at current levels. So ACC could be continue to rally higher from current levels. 1600 approximately could be kept as a target on the stock and stop us at 1530.
All right, watch out for ACC. That's important levels to take note of. The stock is a little bit quiet ahead of the numbers. Meantime, Hero MotoCorp, and how is the street digested the earnings, Karanya?
Well, Avan, the stock has significantly come down from the day's high point. As we can see, the numbers were completely in line. On the bottom and top line, it was a tad better than what the street had estimated. But yeah, overall, looking at the numbers, it's not a very good set. The management, however, did say that they retain their volume target of 8 to 10% for the full year. They're on, on track for new launches, on track for new scooter launches in the 125 segment. But brokerage calls have largely been mixed. While Nomura has a buy, they do say that higher competition is a big risk. CLSA is not too optimistic about the growth prospects going forward, despite what the management said. They retain their sell stance. So there you have it. It's a mixed sort of a view coming in as far as the earnings reaction is concerned.
Okay, that is Hero MotoCorp. It's certainly slowing down in trade as we speak. But what sure isn't is J&K Bank. Take a look at that. Double-digit gains, and it's much deserved. It's been a pretty strong set of earnings that the company delivered in the second quarter. Remember, it's reported 6 consecutive quarters of profitability after recovery from a loss in the year 2017. You have a pretty strong set of numbers on all parameters. The net profit has jumped 20% to 93 crore rupees. The gross NPA has fallen to 9% against 9.83%. The net NPA as well has cooled down quite significantly. So asset quality has improved. So 3.9% versus 4.85% for J&K Bank's net NPAs. The management is talking about the expansion of credit in retail and the fact that they will continue to see credit growth from low-risk, top-rated companies. No wonder the stock is up and away. Moving right on to number 5, and that is DHFL. In fact, that stock, as we speak, is showing you quite the reversal. And what a volatile candidate. What's the latest on that?
Reversal, it was in a downward trend any which way, and we are seeing huge pile up of position in future segment. Last I saw, it was 38-40% rise in open interest. Now this stock is determining what's happening to the mood of the market. In fact, DHFL and India Bull Housing Finance, both are these NBFCs which are showing signs of massive correction, not just in today's trading session, but the overall trend is negative and volumes are high in both these segments. So all in all, watch out for these names for further pain.
All right, watch out for these names. Indeed, that's the view coming in on DHFL. High volumes in cash as well as futures. Moving on then, it's Tata Global Beverages. And I'd just like to take Ashish, for one who has, say, missed the bus on this stock, does it make sense for fresh buy positions at the current levels? And what do you do at the current level of 235?
The stock short-term trend looks to be on the upside, but it is important that the resistance level is taken out. So it is recommended that one should buy above 240, keep a very strict stop loss of 230, and then expecting a target of 255 short-term.
Okay, some important levels to watch out for. You can look to buy above the resistance levels of 240. On that note, let's just take a quick breather right here on the show. Do come right back as we flag off a lot more stocks on Market Fatafat. Welcome back. This is Market Fatafat. All of our research analysts, Ashish Kayal and Kunal Bothra, standing by to run us through all of the stocks that you need to keep on your radar. Let's get in, Mubina, then to talk about IIFL Holdings as well, and this one is in news today.
Well, yes, for two reasons. First up, that one of its subsidiaries, IIFL Home Finance, has raised about 1,000 crore rupees from the National Housing Bank and another $50 million via ECB. This is something that enhances their asset liability management, of course, also provides liquidity. These facilities are for a period of between 5 to 15 years. So that's an update. Additionally, IIFL Wealth, another unit, has announced that they are going to acquire Chennai headquartered Wealth Advisors India Private Limited for a consideration of 235 crore rupees. They have a formidable presence in Chennai, Bangalore and Coimbatore, and also present in Mumbai and Pune. And the management says that this is something that has a lot of commonalities with IIFL, strong alignment of a highly client-centric approach and top quality talent, of course, coming their way. But the stock has lost out from the day's high.
Yes, now crashing onto the 444 mark. But moving on then, it's L&T Tech as well. Take us through the latest news on the acquisition, Karanya.
Mainly completed their acquisition of a Bangalore-based company called Graphene Semiconductor. This is an update that came in last evening. Apart from that, we also seem to have a view from Goldman Sachs on L&T Tech as well. They continue to call it their top pick within the space, target at 1540 per share, reasonable valuations and strong growth trajectory is something that they are betting on. The company also, according to them, has a good order backlog.
All right, that's the view coming in on L&T Tech, the stock in focus. Meantime, it is continuing to be the big story of the day in terms of the media space. What we're closely monitoring is the potential acquisition of 25% stake in Hathway and Den Networks. Remember, both the companies are slated to have a board meeting with respect to equity infusion. If this deal culminates, it certainly is going to raise a lot of competition within the space. It's going to help RelJio expand into the TV subscriber base, as well as a compelling Fire broadband offering by RelJio, and that would really help the company to push up their overall market share gains. We'll have to wait and watch if this announcement actually culminates or not, but do remember you will have both the stocks in news. Well, let's move on to stock number 10 at SRF. It's 1800 rupees. What exactly are the observations, Siddharth?
You know, and despite market going, you're completely giving up at gains, and now market is in red. There are some stocks which are holding their ground. SRF is one among them. Now, what's happening over here? Volumes are pretty high. Last 2 days volumes were less, so today's cash volume is already twice of last 2 trading sessions volume. In fact, we are just in first 3 hours of the trade. It is quite possible you might see a 2-month high volume in SRF. We are seeing formation of long position, not by very huge margin, 7-8% rise in open interest, and stocks seem to be in decent uptrend. So watch out for this name for further upside.
Okay, that's the outlook coming in, 2.5% on that stock. Moving right on then, let's focus in on IT and HCL Technologies. Are we seeing some sort of a recovery kick in, Kunal, that's here to stay is the question?
It looks like, one, because the stock bounced off from its 200 DMA, I think 2 or 3 trading sessions back. And from there on, it's finding a decent traction. Even though the volumes have been slightly lower than what could probably have been, required for the stock to restart a new uptrend. But nevertheless, I think the first set of, resistance now for HCL Tech lies around the 1055, 1060 mark. So I believe the stock should try and retest those levels in the next couple of days, and that is where I believe would be the real test, whether this is a restart of a new rally for HCL Tech or just a short-term correction.
All right, watch out for HCL Technologies. The recovery is very much evident. Moving right on then, it's United Spirits, and Goldman Sachs has come out with a report. What exactly are they saying, Mubina?
Well, they are quite neutral on United Spirits. They have a target of 558 rupees for the stock price. Yes, at 540, they believe that the valuations are comparatively much more easier. However, according to them, higher costs do remain a critical risk for the company. But furthermore, they say that the earnings of this company are quite sensitive to net price changes, to E&A costs, etc. And hence, that would be a key monitorable. It's something that they are flagging off as a risk and hence a neutral stance. The stock price, however, is gaining in trade.
Okay, it sure is at 540. Meantime, Federal Bank as well came out with a solid set of numbers. What exactly is the brokerage takeaway, Karanya?
Well, Avan, the street verdict is again mixed. Despite a very strong set of numbers, like you rightly pointed out, Citi has trimmed its estimates down by 1 to 5% on account for higher operating profit as well as the provisioning. They have a neutral rating target at 80 rupees. They also did say that the bank has reiterated their FY19 exit ROA guidance of 1%. They've raised FY19 slippage guidance from 1,300 crores to 1,450 to 1,500 crore rupees as well. Having said that, UBS has a buy rating on the stock, and even a Kotak continues to be betting with a buy rating again. So mixed sort of reactions coming there.
Okay, that's the view coming in from brokerages with respect to Federal Bank. 80 is where it's at. Remember, yesterday it soared quite significantly on the back of numbers. Moving right on then, let's focus in on Crystal as well. This was one of the candidates that came out with earnings post-market hours. Margins are a little bit flat at 26.3% versus 26.5%, but the profits have come in higher by almost 30%. It's been a strong number. The operating income is higher by 3.9%. EBITDA marginally higher by almost 3% on year. The stock is holding out in the green. To the ADAG stocks, and you've handpicked Reliance Capital, Siddharth?
Well, yes, an overhang of NBFC on this name. We are seeing 5% reduction in prices. There is 6 to 7% rise in open interest. Volumes are pretty decent. Short formation visible over here, not because of ADAG impact, but because of NBFC impact.
Okay, that's the view. And currently struggling at the lowest point of the trading session. That's Reliance Capital at 255. Ashish, let's talk about the very contentious bank, and that is Yes Bank. It's been, of course, in the limelight of late. What exactly is your assessment? What does one do right now?
The overall trend for Yes Bank looks negative. We saw some 38.2% Fibonacci pullback, and the stock is now giving away again with the NBFC pressures and the banking sell-off. So it's best to go short on Yes Bank at CMP. Keep a stop loss of 246 for 220 is the target.
Okay, sell. That's the recommendation that Ashish has. Meantime, Mahindra CIE, Mubina, and walk us through the earnings. It was a fairly impressive quarter.
Well, yes, and that's reflected on the stock price, which is 3% higher. We had a revenue growth which was quite decent at about 21.7%, but really the profit line did certainly steal the show. But yeah, talking about the individual numbers, the Q3 revenue stood at 652 odd crore rupees, higher by 22%. Margins as well expanded to about 12.2% from 11% in the corresponding quarter. So it's a more than 100 basis points jump. We had the profits, by the way, going up a neat 74% from 24.5 crores to 42.6 crores.
Okay, strong financials, strong movement on the stock, undeterred by the market volatility today. Mahindra CIE standing tall. Meantime, Reliance Industries, and all eyes are on this candidate today. Karanya, what exactly are we expecting?
Well, we're expecting a 15th straight quarter of profit growth. That exactly is what the street is expecting. Profits are seen at 9,600 crore rupees. Net sales could be about 1.4 lakh crore rupees. Margins could be coming in at 14.9%. Versus 16% on a sequential basis. So a slight compression is expected on a sequential basis on the margin fronts. Now, important factors to watch out for: good petchem to set off soft refining, the impact of forex fluctuation, what has been the real impact on the financials. Has there been any improvement in the performance of the retail segment? Because retail business is something that the street wants to know more about as far as the performance is concerned. Jio continues to gain a share from incumbents, so an update on that would also be good, and how the performance has been on the P&L. And chemical margin outlook also seems strong, so one would like some color on that as well.
Okay, that's the take coming in. RIL is a big candidate prior to its earnings, which is holding out in the green. But Cochin Shipyard, in fact, is certainly not. In fact, the board has approved a buyback proposal. They are looking to buy about 43.9 lakh shares for a price point of 455 rupees per share. It got off to an okay start, but then tempered down, clutching onto the level of 395. Well, let's move on then and Siddharth discuss United Breweries. It got off to an okay start and now it's currently quoting higher by about 3%. What exactly are your observations?
Well, long formation here as well, and if you look at the stats, then we have seen, that stock is moving towards its or above its 200 DMA, which was around 1150. That support has been respected, and we are seeing long formation in future segment. All in all, in a market which is choppy, there are only few stocks which are adding long positions and moving higher. United Breweries is one among them.
Okay, thanks very much then, Siddharth, as well as to everyone else for joining in then on Market Fatafat. That's all the time we have right now. Stay tuned. We've got markets at noon coming right up.